Investing your money is one of the smartest things you can do in your 20s. I know it can be tempting to spend your hard-earned cash on nights out and weekends away, but trust me when I say that investing now will pay off big time in the future. Not sure where to start? Don't worry, I've got you covered. In this video, I'm going to share with you my top tips for how to invest money in your 20s. Determine your investment goals. Determine your goals before you start investing. Your investment strategy will need to match your unique vision of your future. Think about how you want to live your life when you retire and work backwards from there to make it a reality. What you want might change along the way, but it's good to have a goal to aim towards. You'll also need to understand your risk tolerance. Your risk tolerance relates to how well you can endure losses for higher potential rewards. If red days make you squeamish, then you are better off sticking to safer investments. Invest in yourself. The safest investment is investing your money in yourself. Investing your cash back into your education and training is the best way to generate investment funds. When you have an in-demand skill, people will be willing to pay you more money. Investing in yourself makes you invaluable, regardless of your net worth. This includes taking the time to learn about personal finance and investing. There are tons of great resources out there, like books, podcasts, and online courses. The more you know about investing, the better equipped you'll be to make smart decisions with your money. Start small. Investing doesn't have to be expensive. In fact, you can start investing with as little as $20 a week. This is called dollar cost averaging, or DCA. Just make sure you're consistent and disciplined with your investments, and you'll see your wealth grow over time. Consider index funds. Index funds are a great way to get started in investing because they offer diversification and are relatively low risk. When you invest in an index fund, you're essentially investing in a basket of different stocks or assets, which helps to minimize your risk. If one of the stocks goes bust, you don't lose all of your money. Consider IRAs. IRAs are one of the best ways to start investing when you're young. An IRA, or individual retirement account, is a tax-advantaged account that can help you save for retirement. There are two main types of IRAs, Roth IRAs and traditional IRAs. Roth IRAs are funded with after-tax dollars, which means you won't get a tax deduction when you contribute to the account. However, the money in the account grows tax-free and you won't have to pay taxes on it when you withdraw it in retirement. Traditional IRAs are funded with pre-tax dollars, which means you'll get a tax deduction when you contribute to the account. See if your employer sponsors a 401k. 20-somethings can also benefit from decades of compounding by investing in a work-sponsored retirement plan. Usually, this comes in the form of a 401k. A 401k lets you invest money on a pre-tax basis that grows tax-deferred until you withdraw it for retirement. Some employers even offer a Roth 401k option, which would allow you to make after-tax contributions that grow tax-free. With a Roth 401k, you won't have to pay any taxes when you withdraw for retirement. Have a long-term perspective. Investing is all about taking a long-term perspective. Investing is a marathon, not a sprint, so don't get discouraged if you don't see immediate results. Consistency and discipline are key. With that being said, investing in your 20s means that you can have significant wealth built by the time you're 40. The sooner you start, the sooner you can retire and focus on what you care about the most. Find what you're passionate about. Find investments that are worth your time and money. If you're passionate about a particular company or industry, you're more likely to have the drive and motivation to research it thoroughly and make smart investment decisions. Since you are in your 20s, you will be able to grow alongside the investment and learn about the industry as a whole. Of course, passion alone isn't enough, you also need to have a solid understanding of the financials and risks involved. But if you combine passion with due diligence, you'll be well on your way to successful investing. It's okay to take some risk. While you want to invest most of your money into safe investments, it's okay to allocate a portion of your money into riskier assets. These assets, like stocks and cryptocurrencies, can yield higher returns. Your 20s can be a good time to get involved in high-risk assets because you have a long time to recover from losses. But you'll want to stay away from these investments if you have a low risk tolerance. Remember to do your own research and never invest more than you can afford to lose. To recap these investment tips, remember: 1. Determine your goals and assess your risk tolerance. 2. Invest in yourself first. 3. It's okay to start small. 4. Consider index funds, IRAs, and 401ks. 5. Have a long-term perspective. 6. Invest in what you're passionate about. 7. Take some risks, but never invest more than you can afford to lose. Congratulations, you're ahead of the curve. Investing is one of the smartest things you can do with your money in your 20s. By following these simple tips, you'll be well on your way to financial success down the road. Your future self will thank you. So what are you waiting for? It's time to start investing.